say make money, money, make money, money, money. Make money, money, make money, money, money. Money makes the world go round. I'm the talk around town. Remy gave me the sound. I need a Skrilla on the Rilla.
As always, my compatriots, my comrades, Bruce and Georgie Boy. Even changed his name to reflect that. Say hello, gents.
It is my favorite financial podcast. I confirm.
Second that.
Once again, you guys are
best one on the internet right now.
Once again,
on the internet,
my energy. Where's the BDE, man?
Well, you know, for us on the West Coast, this is early Sunday. I'm still in bed normally.
Okay, well, we're off to a great start. I'm going to give my prophylactic comments around, do your own homework. Don't construe this as investment advice, even though it kind of sounds like investment advice. We don't know your situation, suitability of investments, etc. We disavow any losses that you may experience as a result of taking our advice. Consult
What
your
about
financial
gains?
advisor. Gains are cool.
Send them this way.
With the Z. Yeah, that's right. Yeah, I could use some.
We'll take 2 and 20 of any gains you have. Please Venmo Georgie Boy.
Right.
Not responsible
He can
for
charge
losses,
3 and
only
40,
gains.
right? He charges 3 and 40. He's got the Biden inflation adjustments to make.
He charges that Renaissance technology carry.
That's right. Jim Simons, 6 packs a day, just like good old corpse of Jim Simons. Zombie Jim
R.I.P.
Simons.
man. R.I.P.
R.I.P. All right. So, hey, let's move on to. All right. Well, I think there might be an election in this country. In a short
I've noticed.
couple weeks. I saw a couple signs about waltzing, some dance signs in my neighborhood in North Carolina. So, what do you guys think, man? Who's gonna win? What's gonna happen? And what's gonna happen to the stock market when that happens? Let's do a poll. What do you guys think? Who's gonna win? Start with Bruce.
I think Trump's gonna win. I mean, I wish they could both lose in some ways, but
I love that. I wish they could both. If only they could both lose.
RFK is out of the race. I hate to tell you.
But unfortunately, I think. I mean, look, I think one of them has to win, obviously. And I think it's gonna be Trump. Like the guys at 538, the poly markets, which I know you guys have views on. But also, I just think I think the border is going to continue to be a big issue for a lot of folks when they get to the polling box. I think the economy still feels like it's not on stable footing. I think that's going to compel people to vote for Trump. And I just don't know. I think at the end of the day, I don't know how likable Mamala is. And I think that always plays a factor.
Listen to you, Trump supporter.
Anyway, handing it over to Georgie Boy. What's your view on the election? Who's winning? Who's losing?
Kamala is winning. Well, Trump doesn't have a chance. Honestly, I don't know.
I agree. By the way, Bruce is wrong.
Yeah.
You're right, Georgie.
It's gonna be close. It's gonna be close either way. It honestly could go either direction, but I mean, I don't know. I don't have good data. It's just my gut.
Let me ask you a different question. Who are you voting for?
Ooh,
It doesn't matter. I live in California.
that is super personal.
I'm gonna vote for Gordo.
It doesn't matter who. It doesn't matter in terms of who carries the state, but it matters in terms of what we think of you.
So I will say this. I am technically a registered Republican. How many times I've voted Republican?
Okay,
It's probably 0. So yeah.
California, Republican in the Bay Area. A wolf in sheep's clothing, man. Wait till this gets out. Wait till your colleagues hear about this.
Mr. Horowitz and Dreesen over there, we're hanging out. No.
Horowitz switched sides mid-election. You must.
Oh, that's right. That's right. He threw his cards to their side. No, I didn't vote for Trump the first time. I'm not going to vote for him the second time. So.
What about the third time? Because this is the third time.
Third time's the charm.
I might vote for him the fourth time. When he's 80, whatever. When he's Biden's age, I might vote for him.
What I did appreciate was he was talking about Jerome Powell. Did you guys see that where he was saying how Oh, the guy has an easy job. He just shows up once a month, flips a coin, and decides the rates. He's like, I could do a better job than him.
I was saying to my friend, as much as I don't like Trump, I have to admit he's way funnier than I want to admit that he is. He's a funny guy. I mean, it's also sad and scary, but he's
Takes
definitely
a little dementia adds some humor there too.
Yeah, he's out there wandering around talking about Arnold Palmer's dick. I mean, like, what is going on with this guy? He's saying that he did a rally last night saying that Arnold Palmer is hung like a horse. But Kamala's not talking about policy. I wish Kamala would talk about policy because Trump is so substantive with his commentary. I mean, that's just some gold. And now I know how to vote.
He's got that big AP energy, man. That BAPE energy.
I have Sigma energy, I think. What does that even mean? Sigma?
Gordon, what close us out here? Who's winning?
Oh gosh. Oh, I think it's going to be Kamala. I'm on the ground in North Carolina, and I mean I think it's pretty clear that both North Carolina and Pennsylvania are pretty strongly leaning towards Kamala. Between Mark Robinson's debacle, in the floods in the west part of the state that'll probably disrupt voting, and the fact that Trumpers are so dumb they don't do mail-in voting because they just they're owning the libs by not voting. That
fraudulent.
Yeah, and I just I'm kind of in the trenches here, man. I'm in the unemployment line. I have black friends, so. And black kids, like I'm out there, and I'm seeing stuff. I'm not working, and I'm telling you, on the ground, it feels to me like the momentum is strongly towards Kamala. It seems like, as usual, Trump is like trying to lose. Like he just every day he says something so stupid and crazy that you're just like, really? If he just did nothing, if he stopped talking like a month ago, he might have won. But like he just can't help himself, right? So, and I do think the markets are probably pricing in her victory, having the uncertainty lift off. And I can tell you the conditions on the ground right now. I feel like budgets are slowing. I think this earnings season, we should briefly touch on that, is going to be a disaster for everybody but NVIDIA and the kind of AI complex. Like, those companies should be fine, but like I think traditional SaaS just continues to lose share to the AI players. People are kicking investment down the road as much as they can, doing more with less, even not spending on essentials. Like I have a friend who has like a pricing analyst. He really needs an open position, but like HR is just like, nope, got to reduce headcount. Sorry, not going to approve it, even though this is an essential function. Like make it up, put a finger in the air. Like people are burning the furniture. So, but I do think the good news is I think Q1, capital markets probably open up. We start seeing IPOs. People start, they feel like they've got new budget, and I think people maybe start to spend. But I think it's going to be a horrible earnings season, with the exception of a couple, of the haves in the AI, multiplex. What do you guys think about the earnings
Speaking
season?
of the haves, did you guys see that poll on Blind with that asked the net worth of all the NVIDIA employees, and they had 3,000 people respond, and a full 36% of them were worth over $20 million.
Isn't that insane?
Like they had like a lot of they had enough people where it's like, statistically significant, and basically like NVIDIA has like, I think like 35,000 employees. Over a third of them are worth more than $20 million. It's
All I got to see is God bless America and
insane.
capitalism.
Dude, like
Those
That's
people
gotta be good for
all over-
housing prices
it's
over
gonna
here.
be a $4 trillion. So like, it's gonna be a $4 trillion company. They have 35,000 employees. Microsoft is almost like a $4 trillion company. I think they're like worth a couple $100 billion more. They have 275,000 employees. Like that's the difference. It's just like outrageous. I mean,
Oh yeah, and if you were granted stock options in the last or RSUs in the last 4 years, it's just been a rocket ship,
Dude,
right? So like,
I wish I was just like an ops person who stuck around from the 90s. Like just like I would, like I'm filling out some random form for 30 years.
Let's tell you guys.
account payable. Let me pay them bills.
Right.
So I was going to tell you guys that I know somebody who turned down the CFO job at NVIDIA 3 times.
What
He didn't want to work
CFO
for Jensen. He didn't have staplers thrown at him. So like he'd be a billionaire with a B, but and he's not now. But yeah, NVIDIA. I have
Got
a
his
friend.
head.
Yeah, another friend. Yeah, I feel more bullish than ever. Like about AI. I mean, the more I hear about it, it just seems like things are really percolating, and that if anything, that could be a negative surprise for like the entire labor force in the next few years. There could be no recovery because it's just getting so good. And
There won't be a recovery. It's just
Yeah.
a matter of when, honestly. Like I don't think it's a question of if. In
I
my
also,
mind, at least, I
So
think.
you don't buy the saying that someone who you need to know AI, it's going to make you more efficient, and so AI is not going to take your job. Just
Lies, lies, all
yeah,
lies.
yeah.
Like going up AGI, like the whole which is what everyone's racing to build, is so that it does all of your jobs. Like it's not like, and we're gonna stop here. That's never been like the point of
The
creating.
co-pilot idea is a farce, right? It's the bridge to
Yeah,
yeah.
it's just a ramp. Like it's not, the ramp's not gonna end like right before it starts being destructive to
I'll
like.
tell you the one thing though, I feel like podcasting's safe. No, actually, so you already did that. You did like a little. I saw the script. Like we basically took a shot at doing a podcast with AI bots, right? You did like you tried that, right?
I used Google Notebook, and I fed in our past podcasts, and then I put in a bunch of research reports for the topic that we're talking about today, which I'll break it here, Twilio. Yeah, and it created a nice
Ooh.
little 10 to 15-minute podcast. The one thing I will say it nailed is it nailed your disclaimer, Gordo. Like it just had that down.
It didn't do the news flash.
So hosts are basically
Nah, it
dumb.
was missing. It was missing
Oh,
the news flash.
speaking of the news flash, no one's done it. Maybe
You gotta do it again. News. Okay,
Welcome to the news this evening with your hosts, Gordo and Bruce.
and this has been an election minute. Just a tip.
Here's
So,
here's
okay.
one piece of news that I did want to talk about, and we haven't talked about this at all. So we'll see if it's worth talking about. What did you guys think about? I was watching the earnings of ASML. So they had an interesting minute where their IR team put out the earnings a day early. Oops, and
First
they
of
weren't
all,
good.
might have been the PR team, so let's not indict the poor IR team. We'll see whoever gets
Maybe it was
fired.
AI. Maybe AI
Whoever
was their fault.
whoever's LinkedIn gets updated first, that's the one who got fired. That's whose fault it was, right? But yeah, early release, and there's a lot of wheat smoke in the Netherlands, and I'm gonna, got a thesis
Right.
around it.
But ASML is like a key bellwether of looking at like future chip demand, right? And they had a pretty bad earnings, though they did call out that the AI was still strong. And then you had Taiwan Semi come out afterwards and say that demand was smoking, and
hammered it.
and so it was almost like two different reports there that you got. So, the market went down on the ASML news looking at that. I don't think people were prepared for it. And then it was just negative. And so, kind of to your point, Gordo, like AI is fine, but everything else is suffering. So, when you look at the rest of the chip complex, like we talked about onsemi and some of these others, they're not seeing maybe the demand there. What do you guys think? Do you think ASML is kind of ringing the alarm here? Is it the canary in the coal mine, or is Taiwan Semi the more accurate predictor here in the near term?
It's a real bellwether for NVDA is TSMC, and like semicap equipment is like a multi-year cycle, right?
Yeah.
Like these are things that you're putting in equipment to make for stuff that you're gonna make like quarters away potentially, and you can pause pretty easily if you need to. So it just by its nature, just incredibly bursty or potentially volatile, right? So I don't know read too much into it.
I mean, I think ASML is probably a longer term, several years out type of view, where Taiwan Semi is the now, the here, the sooner. So you're going to continue to see robust demand, and then the question is, years out, is this a sign of concern?
Yeah, I mean, I think the thing with
there.
ASML is it's also exposed to a bunch of end markets that are outside of AI, like industrial end markets and automotive end markets, and so I think they're more susceptible to other markets being down than just being specific and hyper focused to like the chip industry, like TSMC is. I think they also have some sort of like regulatory heat about selling into China or selling into unfriendly geos that I think has impacted the stock, and so I think it's one of those things where it's still worth like paying attention to, but TSMC is obviously like the bellwether gold standard of like what's happening in the chip industry. And I mean, even they have some like regulatory heat from the United States around if they're selling to Huawei right now. But it is like such a big miss, I think, for me at least, and probably for everyone else. Is like you think about like AI ramping over the last 18 months and not buying TSMC. It's just like a complete no-brainer. That stock's up like 100% in 12 months. I mean, like
Didn't Buffett exit it as well?
he exited it up like, I don't know, 10 or 15%. Like he left so much money on the table there, and it just is like. But I think he was worried about kind of the geopolitical risk is my guess, just because obvious reasons. But it's just like TSMC makes like 90+% of all the advanced semiconductors in the world, and like there's no competition. I mean, it's just like they're always going to benefit from this type of upswing. So
Yeah, you got a lot of Intel and like, you know, shitty foundry stuff out there on that, you know, like ASML is exposed to some booty semis, right?
yeah,
That's the technical term for that.
I mean,
Non-leading edge. Booty semis. You heard it here first.
Well, at least we know the auto industry will be saved by the Tesla announcement that I saw this last week. Elon to the rescue. What did you guys think of the what did they call it? What was the event? It was supposed to be the self-driving taxi. I forget what they called it.
Robotaxi event.
Robotaxi.
I just saw the
I think-
headlines, but everybody was like, "This is bullshit."
I thought Gordon said he was operating one of the robots there, like he was in the command tower.
No, I need my own sex robot. I think you're confused.
It was like going up to people. and
Actually, just a
grabbing their
homeless
asses
person
and
wrapped
stuff.
in
It was
tinfoil
weird.
that I bought a bottle of Mad Dog. That's all it was.
It got a little weird at the event, but
It wasn't weird. I like the weird. You know, I gotta keep going to the edge. I gotta keep mixing it up to get that on that hedonic treadmill. You know what I mean?
well, it was called wasn't it called like I Robot or You Robot or something like that? It was something
yeah,
weird.
the movie's iRobot.
Yeah, isn't the movie the producer like getting upset with Elon over the lookalike of the robots versus the movie? They do look eerily similar.
Man, imitation.
Which is not a selling point given what happens in that movie. Master.
Yeah. Anyway. Simulation. We're in a simulation. I will say, I mean, Elon's at the center of it all, right? Like X.AI, you know, Supermicro just said they were shipping 100,000 GPUs a quarter. I think a lot of those are going into the XAI cluster. I think Jensen admitted that, or talked about the, with respect, how like basically this guy, like he's standing up this massive data center in an unbelievably short period of time. And, you know, he may get to generalize AI first, you know, it seems like. Kind of scary.
I have heard that opinion as well.
Yeah.
So don't count him out.
Well, at least he's a benevolent guy.
Elon,
We
we
could
can
write about
trust.
the good of all on the planet and not about his megalomaniac, egomaniacal fantasies. You know, at least he's not just breeding himself and giving them weird fucking alphabet names and shit. What a fucking whack job.
Sure. You have to trust the future of AI to either Elon Musk or Sam Altman. Who's it going to be?
Sam. For sure.
The evil you don't know. How about that?
He's more
You'll
emotionally
know that evil
regulated.
left.
I mean, literally every single person who is a senior executive left that firm in the last 6 months.
Yeah, but he fired them all. Isn't that what you were saying?
Yeah, they're
There's mutiny.
losers.
I don't think
Those
I
are
don't think he's
losers.
fired. I think
That's
I
the
mean they're, like,
discard
the top
pile,
researchers
Bruce.
in AI.
They're all in the discard
They're
pile.
all hard to work for, right? The guy drives people, so that's how you get results.
It's AI Jesus that you're talking about, Bruce. Watch it.
No man, I don't know. He's taking a what is it, like a 501c3 like charity and turning it into like our evil taskmaster. Like
That's genius. That's
but-
regulatory arbitrage.
I don't know. Elon was the first money in there too.
Yeah, I was gonna say those two used to be linked together in this. So
I don't know, man.
birds of a feather.
Yeah.
But they got divorced early, like, you know? And so I kind of feel like, yeah, Sam's clean. Did not get the herpetic lesions from Elon. So let's wrap this up. What's the conclusion here? What are we buying? Anything? Nothing?
I
Sounds
think
like
you
we're
got,
all still bullish on AI.
yeah.
Stay away from everything else for the time being till earnings prove otherwise.
I'm going
Yeah.
long spoos and blues, right? For the election because I think it's going to be. By the way, that's like Trader Talk, Zervos Talk, Dave Zergo. Remember that guy, David Zervos, who at Jeffries used to be the economist. He's talking about spoos and blues, which I guess is like S&P 500 and like blue chip, whatever Dow futures or what have you. Like I think that just the uncertainty of this market. It would be interesting to see like after the election how often it's gone up just in like the month or the months after. Like I think you just get like an uncertainty alleviation rally, and it feels like there couldn't be more uncertainty there is right now, in the world.
I don't know. The
with
only
the
thing I
election.
say is I do think though that like the Fed has done a reasonably good job at like getting us to a potential soft landing. I think if rates come down and like we get less uncertainty with the election, like I don't know. I think the market will continue to go up. Like I think I see more like upside than downside at this point in the market. No,
I
I
wanted
thought
to
they
hike.
should raise rates. I thought they should raise rates when like employment was
Yeah.
full, the market was high. Like why not raise rates and just truly kill inflation? And they didn't. And I mean, we'll see. I mean, it looks like it's worked out, but
Yeah.
I mean, I don't know. It feels like like all
So you're a Jerome fan, basically, is what you're
I think he's
saying.
done a great job. Yeah. And
Well,
certainly the better job is just to cut rates and like gas the market as much as he can. That's his only formula for success. It's like
cut
make money
rates and
for
raise tariffs.
get the
Come
market
on.
to go. JP is JC in this market.
That's right. All right.
All right.
So let's move on to the main event. Let's get ready to rumble. In one corner, we have Georgie Boy. In the corner, we have Bruce. Today we are talking
People's champ.
Twilio in a special segment we call the falling knife.
Oh, guys, this is gonna be light work, guys. Real light work.
Bruce,
I'm
you
just
just said
telling
I want you to
you.
warm up. I
Listen.
want you to get warm.
We
Don't
we
pull
might not even
something.
need a full slide for this bull thesis.
Bruce isn't
to
even
get-
laced up his gloves, right? He's like they're like half laced,
Oh, we're going bare knuckles? Is that what we're doing?
There's definitely some cockiness on Bruce's side already. He's just not taking this very seriously, as I can tell. But I know that Georgie Boy is going to, give them the full treatment. So we're talking about Twilio. So
Gordo, why don't you? We didn't really give the overview of the podcast. Why don't we kind of talk about what we do here for a second?
yeah. So our concept here is every week, we it's kind of like a swingers club. We take turns. One time you're the bear, one time you're the bull. One time you wear the horns, one time you wear the furry suit. And and so that's the concept. We do the work for you, so you can sit in the corner on like a cuckold, and while we do all the work and you're excited. Is that a good summary of the podcast? Is that
No, not at all.
I'll tell you what, I'll just put that one I'll just use that one every time. We'll just repackage that one every time. We don't have to waste time on it.
Well, all right. Anyways, for those virgins to the podcast, I will be taking the bull side. I'm going to give you the argument, whether I believe it or not, on why Twilio is a good stock. Bruce is going
You're wearing the horns. You're wearing the bull mask. Yeah, the bull skull.
Bruce is going to wear the fur coat and be the bear here and tell you why it's a bad stock and you should sell. And then in the end, we're going to reveal ourselves for what we truly are, whether we're a bull or bear, and go around the horn. So
Non-binary, whatever you are.
premise.
Yeah, that's right. So,
All right.
so
Difficulties.
oh yeah, so I'm calling this my presentation Twilio. So I should show. I'm like the moderator in the VP debate. I'm gonna be doing some fact checking, despite I'm not supposed to be. So, how did you guys see that? Is it full screen?
Yeah.
Yes.
All right, so I call this first slide, Catch a Falling Knife, I Catch a Falling Star. So the 3-year on this bad boy, on Twilio, is down 81%. Market cap's about 12 billion around, so something like 60 billion before, 65 billion-ish. So that's a pretty big change in 3 years. I mean, it looks like basically like a SaaS IPO from that.
Are you showing Twilio or are you showing a SPAC?
Yes, it certainly looks like some garbage for sure. It looks like some hot garbage from that IPO class. Sure.
So to be fair to Twilio, so it IPO'd, what was it, in 2016? If my memory serves me correctly, somewhere in that neighborhood at $15 a share. So you're showing 2021 where it was above 350 a share.
What have you done for me lately? As Janet Jackson would say.
Yeah.
I think it topped out close to 390. Now it's in a $70 stock. So
So
from
it's
15 to
yeah.
70, if you bought the IPO, you're still not in horrible shape. But yes, it's been a volatile ride. It skyrocketed kind of
Well,
during
sort
the
of
boom
buying
days
the
of
IPO
2021.
is off the table at this point.
Yeah. So here's the valuation, which has been we'll go to a comp table later, but obviously the valuation has fallen as well at the same time. It's gone from like 18 times EBITDA sales to kind of, is it 2-ish now? Basically. And again, enterprise value to forward next 12-month sales, right? Higher means higher growth expectations. Like we've been kind of talking about like 7-8 times as kind of median SaaS multiples. Like so, these guys are definitely no longer part of at the cool kids table at lunch anymore. So no history about me there at all. So let's talk about the surprise analysis. I'm going to call this the crying game surprise analysis. Remember that movie? There were tears with that surprise. It was not a good surprise. And they've had just a lot of like guide downs and some pretty big price impacts. Like they had like a negative 35% quarter, like calendar Q3 of 22. That's a nasty gram. But there's kind of been some like other ones that were 10 to 15%, 10 to 20%. I guess, and this is in reverse chronological order, but yeah, there was the first one really. I don't know what the first one was back in late 21. I guess sort of as COVID wound down, like they started to wind down. So I mean that's really just to set the stage a little bit. I'm gonna stop and give it to you, Georgie boy. I'm kind of hopeful that you're gonna tell us what these guys do a little bit for the benefit of me and others. And
I will certainly do that.
awesome, yeah.
So let me give you my history lesson on Twilio. So Twilio was founded by 3 co-founders. Jeff Lawson being the one that's probably the most famous. He was the longtime CEO and kind of the face of the company. What they do is they provide a programmable interface or an API on top of the communications layer. And so what does that mean? They allow developers, so your software developer, to come in and access communications, being voice or text, and add software logic on top of that so you can embed inside of applications. And so that means if I'm a developer and I want to have my application, for an example, send a text to somebody based off of what happens in my program, that is doable, easily doable through Twilio. You don't have to set up any of the infrastructure. You don't have to go deal with the phone company or wireless carriers. They just allow you to do that automatically. And so that's really the beauty of their platform, is embedding communications via an API. So the company started out with voice. That was their first offering. They did that in 2008. They added text messaging 2010, short codes, SMS short codes in 2011. So this was really groundbreaking, especially at that time, to be able to do this. The company then started continuing to innovate. So they service developers, and they said, well, we actually wanted a great use case for this technology is in customer support and contact centers. We're going to launch our own contact center. And so this was a little bit controversial where, you're a company that sells to developers and suddenly you go and you compete with some of your customers. They were servicing customer support and contact centers that were using their product for voice and SMS. And suddenly they launched a product in that market called Flex in 2018. So that was kind of an interesting move for a developer, centric company to say, hey, we're going to go compete with some of our customers. After that, they started going on an acquisition spree and ramping that up. And so the company bought a public company called SendGrid, which did email marketing via APIs, and so they bought that for $2 billion in 2019. $2 billion is stock. And then they did their next acquisition, which was even bigger, which was for a company called Segment, which I'm sure will probably come up here. So they did that in 2020, I believe, for $3.2 billion. That was also a stock deal. And then finally in 2021, they acquired another company called ZipWhip for $850 million for a combination of cash and stock. ZipWhip was a little more in their core, where it was focused on communications, particularly business communications through API, 1-800 numbers, that kind of thing. Segment was a little bit farther away. It was supposedly a CDP, and I say supposedly, I would say it was very CDP light, but what a CDP is a customer data platform. So in theory, a CDP is helping marketers really customize their messages to their customers. They understand who you are and can really personalize messages. So if they know Gordo, you like to
I like sexting. Mark Robinson. I like message boards. I like dick pics, Dick Nixon pics.
You like let's do something a little more. You like the. I'm trying to think of an example here that's
me, I
appropriate.
want my dick just to go to them automatically. Like I could do that with an API, right? I could resize it and recolor it on the
They'll
fly.
know what you purchased in the past. They'll know your preferences. They can send you a message. Hey, if you like this, you'll also love our new offering. And the idea of the CDP is it's tapping into all these data sources. It understands their customers and allows you to send highly personalized messages.
Is that like DDP, by the way? Is that the same thing? DDP?
What's that?
Double the penetration? No? DDP?
Has nothing to do with that.
Go to X Hamster, you'll see. Anyway. By the way, quick, a serious question. So who do you think is the most direct, viable competitor? Because part of what confuses me here is it feels like this shouldn't be that freaking hard. Like, how hard is it to set up an API database to be like, what is the moat? Like, is it talking to carriers and getting the permission? Or is it the OSI stack being super complex and nobody else can do it and they were first to it? Or it just doesn't look like very hard. It looks like kind of like a commodity text forwarding business. Like, what's the real tech and real reason why these guys have even the margins they have at like, I think they were like in the 60s.
Well, I will say it's not in the 60s probably across that whole value stack, right? But it is, and their gross margins are closer to 50.
Now,
so
I haven't looked in a while.
51. 51%, which is something I'm sure Bruce will bring up. A lot of it's carrier relationships, right? So being able to have the global reach, they have the relationships with the carriers, they get the best rates, right? And then it's really also the go-to-market on the developer side, having developer-friendly materials. So you got developers bought into using their APIs. So they've always been developer-friendly. I remember going to an event early on where there was a developer event and they were giving out free Chromebooks to everybody that showed up, free event. So, sitting in each seat was a Chromebook. But they bought, the developer mindset and they got developers on board. So they knew what to go after.
That still feels like a relatively shallow moat, right? Like, because if you're a service provider, you don't want to just arm like one company, with these APIs or this connectivity. You want to arm everybody, right? Like
well, carriers are notoriously horrific customers, right? They're gigantic, ridiculously consolidated industry, and they love standardization and they love to play vendors against each other. Like the graveyard is full of companies that have been blown up by carriers, right? It's like TEL Labs and Zone, and there's a million of them. So
I agree. I think carriers are bad customers, but they would rather play everyone against each other than king make one company.
Right.
You know what I mean?
Yeah, they're always going to standardize interchangeability, right? And they don't have any revenue growth and they have a ton of data growth. So they're always just that squeeze, right? The jaws of death of their business model, that filters all the way down. Like, I'm trying to come up with a company that made people rich persistently, had a persistent moat that sold to carriers. Like I would struggle.
Yeah,
right?
but they're not selling to carrier line functionality, and there's each have their own markets, right? So you got to go aggregate all these carriers to provide kind of service at a low cost across the globe. I think is strong domestically. They have some international business as well. There are parts of the globe that are not as strong, but that's really kind of going out and creating these carrier relationships and getting the best rates. So they've done that, I think, at scale where others maybe haven't quite gotten there. And you do have like regional players that exist. So, there are competitors out there, right? It used to be.
Here's a list from AI, by the way. Here's ChatGPT's. All right, whoever Google's feeding, who would be Google's back end for AI? So I guess it's just Google. But Vonage, Agora, Cisco, Zoom, NICE, and Ring Central. Like it seems like none of these people actually does what Twilio does in a concentrated way. Like
most of those are through acquisition, right? Vonage bought. I'm blanking on the name of them. It's now part of Ericsson, right? Because Ericsson bought Vonage. Cisco bought a company called IMI Mobile, which was really strong in Europe. As an example, was a public company. Bought them for $700 million. Ring Central, I forget who they bought. They bought somebody. Everybody kind of bought their way into this marketplace, right? Because there was growth, and so that's what people saw. As a way to grab market share here on this new growth area. But Twilio by far is the 800-pound gorilla in this market.
I mean, I agree with that. I just think and I'll get to it when we turn over to the bear side, but I think there are, to Gordon's point, a million competitors in this market, big guys, small guys, open source guys. Like everybody has kind of a piece here. So I'll bury the lead for now, but suffice to say, the moat is questionable at best. But we're still on the cover side.
I like how you're actually showing some restraint. Like you're like, I'm not gonna go for the kill. I'm just gonna just needle him a little bit, and then I'm gonna just chop his head off at the end, like the praying mantis, right?
All right, we've already covered some of the key issues here, right? The margin.
Yeah, don't kill the puppy. All right. Let the puppy get a little longer before we kill it. Let's go.
Yeah, let me finish a little bit of the intro. That I'll just kind of give you the rest of it. You already covered, Gordo, some of the stats in the company, but it's got a market cap of about 11 billion. It has a fair amount of cash. So when you look at the enterprise value and back that out, it's more about 9.5 billion enterprise value. Revenues are about 4.2 billion over the last 12 months. Gross margin is, as we mentioned, 51%. And the reason why the gross margin is so low, just to throw it out there, is kind of what we were talking about. They sit on top of the carrier network. So end of the day, like they have to pay those carriers termination fees for everything that goes over their network. So they're just margin stacking, and you're only going to be able to charge so much for that, right? End of the day. SMS in particular is low margin. Voice is a bit better. But there is a huge chunk of their business. I would not be surprised if it's, close to, the majority of that communication stack that is as an SMS. And depending, where in the world you are, you're probably looking at gross margins there of like 30% in the US if you're lucky, and even lower internationally. So that's just a volume business that you're pushing. You're not necessarily, making on the margin side. So it doesn't have typical software margins because of that. Historically, this company has burned a lot of cash. So over the last 12 months, they've gotten to EBITDA break even. However, if you go back just 2 years ago to 2022, they burned $750 million in EBITDA for a negative 20% margin. So you can see they've had their come to Jesus moment in terms of, hey, we need to be profitable. With that being said, they actually are generating a lot of cash. So there's a lot of stuff kind of going on in their financial statements. So the free cash flow margin was at 17% over the last 12 months. And the company overall on a revenue basis grew 5% last year. They'll point out 7% organic. So some of their acquisitions, I think, have been part of the problem here. Their acquisition spree that I talked about up front aren't necessarily performing. And they have a net expansion. So if you think about historically, this company had net expansion of looking at, hey, my customers spent $1 with me last year. How much are they spending this year? they were, in the 130% range for a long time, kind of during their heydays there. So that meant, for every dollar they spent the year before, customers are spending $1.30 with them. Now that's down to 102. And so that's part of the fall from grace, right? And then really you have here a pricing model that's based on volume. So when you look at this company, a lot of the metrics are very SaaS-like of subscription. It's really not subscription, it's volume-based. It's how many, voice calls, how many emails. They do have some subscription products, but the majority of their business is being driven by volume. And so that's where you see kind of that net expansion number taking place.
So it's not really a SaaS company, is what you're saying. It's a software company, but it's not a SaaS company, really.
At the core of their business, yeah, it's volume driven. Now, people will put volume driven businesses, right? Like volume driven businesses can be great when people are using more and more of your product. And that's, what we saw in the early days during COVID, right? Communications were going through the roof. More and more SMS texts were being sent automatically. And so you saw those numbers really go up. But now I think we're kind of getting more to steady state, at least currently. Maybe two other quick updates on the company. So in that kind of come to Jesus, like price drive towards profitability, they've done 2 layoffs. So in late 2022, they laid off 1,000 employees. And then in 2023, they did a second layoff of 1,400 employees, which was a little under 20% of their workforce. And so they've really been cutting. A lot of that has been on the sales and marketing side that I'll show here in a minute. And then Jeff Lawson, their longtime CEO, he controlled about 20% of the voting stock. And in 2023, that actually part of his agreement was that the his super voting would go away. And so he lost some of his heft on the voting side. So it went from about 20%, I think, down to 10%. And some activists came into the stock knowing that he was losing some of those voting shares, the underperformance, the bad acquisitions. And he, at the beginning of this year in 2024, he kind of succumbed to the pressure and he left the company as CEO, and he also left the board. And he's succeeded by a longtime Twilio executive. So it's now a different company under new management here. So what's the bull case now that I've kind of introed the company? It's really that, Twilio is the go-to name here. It's, it's like Kleenex. It's synonymous, when you think of CPaaS, so communications, as a service, platform as a service, they are the go-to name. They are the brand name here. Like, you had to go Google their competitors, right, Gordo? You didn't even know who they were. So, if you're a developer and you're saying, hey, I need to embed communications, be it SMS, voice, whatever that is, you go to Twilio's your first stop. There still is a huge TAM here that they have to go tackle. So I think it's a market where they have room to go, execute in. I don't think that's gone. And so there's still potential here to, I think, reignite growth. AI is going to offer them, when you think about voice and text, AI is, as Hebrew is grabbing his head. We were just talking about AI, natural language processing on top of communications is a huge opportunity. And so whether, it's them providing it or, AI from other service providers, I do think there's opportunity there for them to, provide new value on top of that. Then the new leadership and governance, I would say, like, no more destructive M&A. They've got religion around cash flow and profitability. They're buying back shares. This is a company that's now driven on much different metrics, which I think are appropriate for where it finds itself. And then I would argue it's cheap on every metric. And so that's really the summary of the bull case for me. So quickly, their product offering, I talked about some of these in the intro. They do SMS messaging. They do voice. They do email. They have what they call Flex, which is really a cloud contact center platform that you can deploy. And then they have Segment, which is their customer data platform, which was the large acquisition they did. And so that's helping you build insights and campaigns to target those customers with intelligence. The big TAM here, so the TAM itself is
inversely proportional to the stock price.
yeah.
TM keeps getting bigger and the stock company keeps getting smaller. Sorry, I couldn't help it, man. I just like the retractable penis.
Most TAMs are BS, so I won't claim. The chart shows 87 billion here, made up of several things. I will, and this was from B of A in 2022 when the stock was probably still doing better than it is today. So it's a little dated, but what I will say is if I look at this chart, like I do think there are portions here that I would grab and argue are relevant. So certainly CCaaS, which is your cloud contact center market, they have Flex in that market, 13 billion, so they definitely play there. The UCaaS market, they play in the majority of the UCaaS market. That's unified communications. So that's voice, it's messaging, it's the like. So that's 6 billion. Account security, all of those two-factor authentications that you get, they certainly play there as well. That's a $5 billion market. And then I would argue that email and marketing campaigns, they clearly play in with SendGrid as well as CDP. That's a $25 billion market. CDP itself is, you could argue whether it's included in there or not, but that's about a $5 billion market. So I would argue there's somewhere between a $30 and $40 billion TAM when you add those up, as opposed to the $87 billion TAM. But that's still a pretty large TAM here for them to go after as a $4 billion revenue company and continue to expand in.
I'm going to flash your yellow lights for a second here. I mean, I'm a former common company analyst. I don't know what, I mean, this is like hard to understand for me. So for the investment community, I mean, I'm sure there are analysts at TWLO or whatever that know this company inside out and can explain every one of these markets. But like, if you're a retail investor or Warren Buffett, you're just throwing your hands up at this thing. And so when things are going well, like people are like, that's a great scenario because people are like, we know what they do, but they're awesome and they're obviously crushing it, you know, and now the financials are not great and the trends aren't great. And it's just like, kind of like, I don't like to see a TAM chart with 1, 2, 3, 4, 5, 6 different end markets, kind of similar. I mean, some are bigger than others for sure, but like pretty fragmented, a lot of different pies to have their fingers in.
This is, I mean, the issue is, I think, with this is it's just overly broad. Like it includes so many different categories, and like the primary category that they're playing in, which is sort of like, you know, API for calls and API for text and stuff, is like one of these buckets. That's where they're probably getting most of their revenue from, and that bucket is like a 50% gross margin bucket. And so in terms of their serviceable addressable market, feels like it's much tighter than this, and like for them to extend past it, it's going to require like a double bank shot, I think.
I think if you look at their very core of like what they're good at, right, which is you know, the communications, and they look at their business, and today they segment their business into two pieces. It's communications, and then it's I think the CDP, or what is segment, like CCaaS and UCaaS and account security. So those top three are clearly kind of their core market. And so if you just add those up, you got 13 billion plus, and there's 6 and 5, so that's 24. Call it $25 billion to go after. That's still a sizable market. That's the majority of it.
It's a sizable market, but like a lot of times, like there's a ton of noise, obviously, in these TAM numbers. Like the UCaaS could include like all the call center like software that people use. It could include like call center.
Well, that's what
phones and, like,
CCaaS is, 13 billion.
Yeah, it could include like telephony equipment. It can include all these like different things that people are throwing in to make the numbers look bigger than they actually are. Like, it would be interesting to know, like, internally what they think about as their like serviceable addressable market. Like, this is what we're really going after, kind of thing.
All right, fair enough. I thought it'd be, you know, we probably don't spend enough time on this podcast, and we spend too much time talking, but we don't spend enough time on the income statements. Here, I think it's just worth explaining kind of what's seen here. And so on this, I show from 2019 through 2023, and then the last column, not to confuse anybody that's seen this visual, is the last 12 months through June 24. So it does include some of that previous column of 2023, but it gives you a more accurate view of current trends. So this was a company that was growing back in 2019, even pre-COVID, 75% revenue year over year. 2020, 2021, they were growing between 55 and 60%. And then 2022, you started to see the cracks really come, went down to 35%. And then over the last 12 months, it's been 2%. So the growth really has slowed here.
Don't worry, George. I'll cover all this in my text.
Right.
You don't have to spend too much
However,
time on it.
what I will show is if you go to the SG&A line, they've gotten a lot more religion here around selling expenses. So as we kind of go, they were between, call it 50s and high 40s, percent of revenue that they're spending on selling and administrative. Today, that's down to 33%. So really, quite a bit of religion there that's come in.
We're really digging deep for the silver lining on a 2% grower. Like,
Not the size
sales have
matter.
got more efficient. We're growing low single digits, but sales are way more efficient.
It's
make it up on volume.
Increasing. Forecasts are increasing. At the takeaway, I would say, is the drive towards efficiency isn't really what they're doing here, and this thing is starting to really kind of generate free cash flow. So if you look at an earnings basis here, earnings.
Okay, we got to stop for a second. Where the fuck is the gross margin line?
Gross margin,
gross profit, but no
worry.
percent.
I'll cover that as well.
That's
Well,
like I was looking for that. Fucking good job, Georgie, to hide that shit. Okay.
Hey, this is the Capital IQ spit out default, so they don't give it to you. I did calculate some of the year over year numbers here, but yes, I could have put that in. So, but I said it up front. They're 50% gross margin, 51%.
And part
Don't
of
worry, it will be covered,
right? Like they have storage or something. I think they have some infrastructure costs. So yeah,
I don't think they have huge infrastructure costs themselves. They're run out of AWS. So, anyways. So what I will show though is even though they have a lot of negative earnings that you see there, their cash flow has actually been quite positive. So they've become a cash flow machine here. So in the last 12 months, they generated over 800 million of cash from ops with very little capital expenditure. So basically, that's all free cash flow. And there's just a lot of noise, both from, call it the amortization around their acquisitions that are in there, so that are non-cash expenses, as well as some investments they've made. And so when you back those out and you kind of ignore those from the earnings, this thing is actually generating a lot of cash now, as they've kind of shifted to focus on that.
It's a pretty big drop in CapEx, though. I mean, like you went from 45 billion, 25, 46, 34, 11, and then 6. So they've gone. I mean,
on the scale of a $4 billion business, it's not that much CapEx to overall.
Is that steady state? Do we know? Is that kind of closer to steady state, like the build out's over, or is this going back to 45?
I don't know what they were spending their capital expenditures on, again, because, most of their infrastructure, if not almost all of it, is really in AWS. So, I'm not sure what the capital expenditures.
It's 800 million in cash flow in the last 12 months. So I guess it's not very big, though,
800 million in cash flow on a $9 billion EV stock is actually pretty good. If you look at a cash flow yield there, you're high single digits, which most stocks you don't approach that.
Yeah.
The one thing I will say here, and it was in my bull thesis, is, and I don't have a slide on it because I was trying to be slide light, is going back to the AI point. So I do think, like, end of the day, like, part of their value prop that they want to push is, communications is ripe for really using or utilizing AI, whether it's in the contact center. So if you think about contact center, it's probably going to be one of the first areas that's truly disrupted by AI. So you can think of the chat bots that, end of the day get deployed, are going to be conversing with customers that they have issues instead of real people. That's something that Twilio has launched with their own offering. If you think about just general communications, whether it's AI sending people more messages via text, analyzing voice calls, those are all things that go over their channel, and they're set up to be able to do that. Those are higher value workflows, and so Twilio is launching products there, and they will support other products. So I do think it's a potential growth area for them in the future, coming forward here. And then I would just say, like, the new management team in general, the focus that's come. So what I would say is the new management team, I think, is focused where the last management team wasn't, around discipline, capital efficiency, and that's what's going to drive value for the stock. They're transitioning it from a growth stock into a real value-oriented stock. And so when you look at the valuation, the company is starting to benefit from that. You're starting to see some signs of life here. I would say it generally, in terms of valuation, it trades in line with its peers here in terms of thinking about most of the metrics. The one that I flagged here and I looked at is next 12 months EV to EBITDA divided by growth. I would say they're kind of right in line with a lot of these companies. However, the ones that are really low here are not necessarily brand names that own their own category and have large TAMs. And so I think that's really where they stand out compared to some of the others. So if I look at, like, a Five9 as an example, Five9 only plays in one area of this market. They are not a leader in their space. They are a competitor in a very crowded space, whereas Twilio is the brand name. It's more similar to a Zoom in that fact. And if you look at Zoom is almost double the valuation here of a Twilio. And so you're getting something that has a large TAM to go after, continue to add value, is a recognized brand name that people know, people trust, and it trades at a very reasonable valuation for having that type of dynamic. So again, good market opportunity, decent TAM to go after, brand name at a very reasonable price, with hopefully an AI, push or kicker here to recognize, is why I can get excited about a Twilio. So with that, I will hand it over to Brucey to hear him harp about gross margins.
Well, I appreciate that, George. There is only so much lipstick you can put on these types of companies, and you did a
Oink oink. Is that what you're saying?
You had a noble effort there. Let me see if I can improve.
12 months earnings by last look too. So it's not like screaming.
Again, the earnings, there's a lot of noise in their earnings numbers, so that's why I would point you to free cash flow, because they have all this, they have investments, they have a lot of amortization that's going in there for their acquisitions. So free cash flow, I think, is really how you got to look at this thing.
I'd be curious, like, what is like HP's EV to free
Well,
cash
HP is
flow?
it's not a modern software.
Yeah, but I'm just trying to figure out, like, what's the basement? Like, what does a no-growth software company trade at? Like, what should be the absolute worst case free cash flow multiple for like a no-growth? Come on, here's no.
Well, we actually have a really good example. Zora just got acquired. They're basically like a 10% grower, so they're growing faster than this, and they got acquired for 4 times revenue. But it's a true software gross margin type company. Got acquired on
trading at
Friday.
17 times on a, so that's actually above on free cash flow basis. So Dropbox is not a big grower, right? And they're trading at 10 times, EV to cash flow. So like that's, where's the box? Yeah, Box is a 16. So these kind of like mature storage names, like that's kind of the basement. So I guess I'd argue that, it's still 40% higher than Dropbox, but it's cheaper than Box. So it's definitely not trading an expensive multiple on a cash flow basis. So I'm going to give a couple points to Georgie on just, it's just fucking kind of screamingly cheap for a software company that might be growing 5-7. I guess the question is, if it grows 7%, will the stock be up? I think it will be, right? I think
if they can execute on that, right, and continue to drive efficiency, that's a story. I mean, this is not a stock that you're saying, hey, I'm buying for it to triple, right? The last thing I will say is, like, again, this is not like a lot of the stocks we've talked about where we're looking for, like, hey, can this double? Can this triple? It's a high flyer. But I think it gives you that cash flow, gives you a floor. It's a lower risk investment because you do have a business that's focused on cash flow. And so could you see a 20% return here and take this thing, more in line with like where DocuSign trades at 17x cash flow and they grow cash flow? Like, absolutely, that's very doable, but the bottom is also much safer. So it's a lower beta play at this point, given, this stock.
Over to the bear side, now that we have our technical issues out of the way. I have my title slide up for Twilio, which says no signal found for those of you that are listening to this only, which I think is true of the stock. I will say, I do agree with one thing that Georgie Boy said, which is that Twilio is like Kleenex. When you're sick and you want to get rid of something, it's probably the first thing you go to. About Twilio. Going back to something, that George had commented on, Twilio's gross margins are not software gross margins. I mean, they're closer to services gross margins. Even though I say it's a services company here, it's really just, a poor technology company. I would say like the gross margin here is from one of their initiating reports, which they didn't live up to. They're closer to a 50% type gross margin company. And so when you think about a 50% gross margin company or a services company, it's a real drag on their multiple story, on their ability to create value. And I think it will continue to drag the company for the foreseeable future. Like even if you think about the acquisitions they've made and any potential future acquisition that could make it look more like a product company, it's not going to move the needle because it's a $4 billion revenue company. If you look at segment, $300 million company, which you had to pay a premium price for, if you acquire a company today that does 100 million or 200 million in revenue, that's a product company, that's an 80% gross margin company, won't move the needle for the company on the gross margin line because it's just a fraction of their overall revenue base. And you would still have to pay up for it, which they can't afford to do anyway. So it's one of those things, I think, where the company is sort of relegated to look like a low gross margin business, trade at a low multiple. No amount of acquisitions are going to get them out of this situation. And it's something that you would have to live with as an investor for both the short and the long term. George has something to say.
I do. The problem with why people don't like services businesses is not just the gross margin. The gross margins are low, but they also don't scale, right? You're dependent on people to scale that. Here, this is a volume business. They are a software business. People can use more and more volume effortlessly. You send more messages, and so I do think there is a difference there, that this is a much better company than a services company. It's just you're playing the volume game instead of, the margin game.
And I totally agree with that. The only problem with Twilio is they have not scaled. Twilio is not a growth company. As you mentioned in your overview, they're doing 2% growth. I have them here doing, between 4 and 5% growth. This is a low single,
which is what the street expects. Yeah, 5 to 7%.
Right, which is what the street expects. I mean, this is not a company that is seeing any usage-based growth. It's not seeing any market growth, despite the, artificial TAM growth. They're not really expanding into that TAM in any meaningful way. I mean, this is a company that even if you could grow on usage and you couldn't grow on services because you had to scale headcount, this is a company that isn't seeing that type of growth. And so it's a poor gross margin business that isn't seeing any growth. At the end of the day, I think everyone would agree on that, which is why I think George is saying that they've, focused more on financially engineering a return with cash flows, which is exactly what I think the company should do. But companies like that are inherently limited in their ability to create value. Like, you're effectively buying a private equity asset, right? They should be buying back stock. They should be maximizing kind of EPS on a low kind of growth rate. It's one of those companies where the ceiling, I think, is in here and the floor isn't. And I think if you think about like what the upside versus the downside exposure is for a company like this, I think you have a lot more exposure to the downside that you do to the upside, because there isn't really something out there either on the roadmap or on the industry that will allow them to get to the next value jump, right? Like if you look at a software company, there's usually things that they can do to manufacture more value. I think for a company that's, basically selling a commodity, there's very little that they can do. And that's a existential question, I think, for the company over the long term. George has something else to say.
I'm curious your point on the downside. So I think the argument I was just making before you started was like the downside's fairly limited here. I don't think this is a market that's going to get disrupted. Like if you look at the disruptive forces, like what people are going to want to be like, businesses are going to want to communicate with their customers.
Yeah.
This is an efficient way to do it. Like that business is solid. They're going to continue to drive more cash flow from it. And you trade cheap. So I think the downside here is really limited on the stock. Like what drives it down? I think, it's a different risk profile and lower beta stock. And yes, the upside is more limited because of that. But the difference I will say here really quickly, like one punch I'll try to land is like, Gordo mentioned Box. Okay. You look at Box and you say, oh, that's a low growth stock. That's a company that I could argue like is being completely commoditized, right? Like they're being squeezed by Google and Microsoft to give that away. Like there's no reason you have to use Box. Like it could go away tomorrow and there's great substitutes and, you don't need it. Twilio, like there's not alternatives that have the breadth and depth of carrier connections, of everything they have. Like people are going to want to communicate with their customers. Like it's not part of someone else is not bundling this away. I think they are the core of this market. So I think the downside is just much more limited, and I would invest all day in a Twilio over a Box, given that kind of profile.
I would disagree. I think that the downside will get exacerbated by the very fact that other folks are coming into this market. It's a commodity solution.
Who's coming in?
I think you're at low single digits today. You come down from like pretty significant growth over the last 3 years. I don't necessarily think the floor is in here. Like they could get commoditized to the point where they're doing negative revenue growth comps, which I think is like potentially a reality here. I mean, this is a company that's effectively a software type company, a next generation software type company that's doing low single digits growth. Like we almost never see that in software markets. Like the lowest you'll see is 10%. This is a company that's growing slower than Cisco, a company that's been around in a public company for 30 years. It's been around selling networking equipment for 40 years. I mean,
let's not give them credit for the inorganic purchase of Splunk.
That's what I'm saying. But like, this is a company that is one of the lowest growing companies that I think you'll find from the universe of next generation software-ish type companies. And I don't think that the floor is necessarily in. You mentioned that Box is getting commoditized by, the big hyperscale web guys. I think that Twilio is as well. I mean, Amazon has their own offering. Startups have a ton of offerings in this space. Open source companies have a lot of offerings in this space. This is a company that's getting attacked from all sides. And they don't have the 80% gross margin profile to lean back on and say, hey, we continue to be a cash cow. Or the growth profile on the top line to say, hey, we can continue to grow in this market. Everybody's growing in this market. This is a company that will get commoditized by Amazon, who will give this away for free, by Microsoft, who will give this away for free. Other public companies like RingCentral. There's a ton of startups that have access to this ecosystem of service providers. This is like one of the smallest moats I think we've ever seen in the industry, with one of the tightest margin profiles. Like I think that the downside here continues to be really, really big, potentially, if the company isn't able to manufacture some sort of, either product buy or some sort of financial engineering, mechanism that allows for shareholders to, reap some sort of benefit here, either on the, cash flow side or the EPS side, or the earnings side in some meaningful way. That could be potentially their only advantage over the long term. They do have some scale in this market, but I don't see the competitive situation changing meaningfully to the upside. And so I think it's one of those companies where you have like, the trifecta of like really hard things to get around, that will inherently limit your ability to create value. Like sort of putting aside whoever the management team is here, like it's just a tough company to operate out of.
So I would say to the competitive threat, like I completely disagree. So like Amazon has had an offering here forever. It's not something they focus on. Hardly anybody knows it exists. RingCentral bought a has-been. It was a distressed sale. I remember I don't remember the name of who they bought, but I remember looking at that asset. It is not a good asset. These startups that you have, listed here, Levo, Cinch, MessageBird, Telenex, like they've been around for a long time. Like Levo was the same era of Twilio, and Twilio just outmaneuvered them by a ton. There are a ton of like really low value SMS. MessageBird is all SMS in Europe, which is even lower gross margin. It's like 15 to 20%. Most of these guys are not a threat to them at all. These things have existed. Like they have won this market. They've outcompeted all these people. I don't think anything is changing here.
I mean, it's just a race to the bottom in these commodity markets, though. Like you're saying, like they're going to sell this same solution. If you're a startup or you're a company, you're trying to use an API-based solution like a Twilio, and you're just basically you can use anybody. You're going to rate shop and go to the lowest cost provider. And like if this market was growing, like if this market reflected the TAM that you showed in your slides, then you wouldn't see a 4% grower. You wouldn't see a 5% grower. Like they're either getting impacted by the commoditization of the market, or they're getting impacted by their inability to execute. Neither of which are like okay outcomes for this company.
I think there's a few things that happen, right? And we didn't talk about this much, given our accelerated timeline here of trying to get this done quick. But like they benefited, they had the COVID pull forward, right? That happened to companies like DocuSign and Zoom and others, right? And they've all kind of gone through the same, struggle of you had a lot of demand pulled forward sooner. And now you're starting to see those companies like DocuSign, probably a little more than Zoom, re-accelerate some growth. But it takes time because you picked all the low-hanging fruit. So there's a little bit of a hangover there. I do think their growth rate is going to be faster than, what you're seeing there from the 2%. Like their organic growth rate is 7%. So Segment's actually slowing them down. So I don't think that it's necessarily...
The thing is, we like almost never see real meaningful re-acceleration at scale.
By the way, I agree with that, by the way, but where's your
so hard?
Since you're both studs in the M&A world, rainmakers or what have you, was the natural outcome here these things get bought by like a Cisco or somebody who comes
This is a company that gets bought by a private equity player. But I think it's really, really hard for a strategic to pencil like buying a commodity service at scale for over $11 billion. That's just,
first of all, the EV, right? It's a lot less than 11. Would you say
$9.5 billion?
And you have a
with a premium, maybe you're back to 12 or something.
Yeah, I just don't think the returns pencil here for anybody other than a private equity buyer who comes in and does exactly what the company is doing in the public markets, which is try to get to as much cash flow as possible and financially engineer a return.
And do they do that here, or do they give the ghost 50% lower? There's a famous saying, right? Like, what's a stock that's down 90%? It's a stock that's down 80% that goes down another 50. So, like, I kind of wonder if that's what
I think you've already found your floor. That would be my argument, is you've found your floor. Because I don't think... I think this business is pretty solid. It's not going away. It's not getting disrupted. These competitors have been here. They've beat them. Like, I don't see where it goes. So I think you've got a nice floor here. I think they are the clear leader. People use them because they work, they're dependable. You don't want your communications going out, right? And you go switch to someone for a low cost, you don't know that it's going to get delivered. With Twilio, the message gets delivered. It is the gold standard. So, like, end of the day, like, to me, like, the downside print is already in. All the bad news is already in. Like, this is kind of where the turn is happening. Again, you're not swinging for a 2-3x return here, but could you make a nice, like, 20-30%? I think you easily can.
Buying a falling knife there in 20% is
it hasn't consolidating for a while.
You buy a value trap for a double, right? You don't buy a value trap for 30%. You buy this thing for, it's like priced for...
Listen, it's been consolidating. Like, I'm not a huge technical guy, but like it's been between 50 and 70, and it's been consolidating there for the last like 2 years. And it's right on the cusp of breaking through that 70 right now. It's going to break out of, if it breaks out of that channel, I actually think you have some more upward action here. And it's really kind of all this discipline that's been brought to the company.
Well, let's pause there and let's call time and say, okay, is that your real opinion, Georgie? Let's pull back, take off your mask, eyes wide open, eyes wide shut, whatever. How do you really feel now after you just gave us that pitch from the bear side? The bull side so strongly.
Yeah, this one I struggle with. I would say, like, I think the big challenge for these guys is like, their most promising growth avenues, like go more into CCaaS, which, contact center, the marketing channels, adding value on top of those. they're going to compete with their customers, right? Like a lot of their customers play in those areas. And so as a developer platform, it's creating a lot of conflict. So I don't think they can really tap on those areas for growth. I think it's kind of, as we said, so I don't think you're ever going to maybe really reignite growth here. I think they did pull forward a lot of demand. I do think they'll see kind of mid to high single digits is possible for these guys. They have a good backstop. They're going to drive more cash flow. So I hate it. It's not my typical buy. I would be, I think, a very weak, I hate hold, but I would be more of a hold. Like, I don't think it goes down dramatically from here, but I'm also not like super excited about the upside. But if you had to push me to one camp, I guess I would be a very weak buy on this thing.
Oh my God. I'll wait. So I'm truly a bear here. Like I think that the upside here is very, very limited.
So bear meaning like you think it'll go down, or like let's define what a bear is.
Yeah, I think it will. I think it will go down. I think there's more risk to the downside here than like risk to the upside if you're selling this short, for example. I just think that this is such a tough market. I think that this is a market, and this is a truly like a prototypical company for like a PE buyer to come in and say, let's get as much milk from a dying cow as we possibly can, because this is a market that's just not going to break out. There's going to continue to be commoditization. The growth here is so modest that I think you do have risk in some quarters of printing negative revenue growth comps, which is like a death blow to to any company, but specifically like a growthier kind of software type name in like this next generation segment. And I just think that like over time, like this type of service becomes a feature of these major platforms. People rate shop this thing away. There isn't enough value in terms of the platform that they're building on top of their core services to really drive any significant margin growth on the gross margin line. And so I just think it's one of those companies where it's like they're range bound, they're stuck, and if anything, they're going to go down a lot quicker than they're going to go up. And like your real hope here is for them to really figure out a way to financially engineer some sort of return to the shareholders. That means buying back cash. Or buying back stock rather. I mean, doing dividends, like figuring out a way to get to as much cash flow as possible, because like this thing isn't going to last forever.
I do think, the PE angle is an interesting one, because I do think if you, to the point of like, their avenues for the most attractive growth are probably competing more with their developer customers. And so could you spin off the contact center as a standalone? Could you go, break off segment and maybe the email marketing business is separate? And there might be value for a PE buyer to come in and take that kind of action, as well as just, milk the core business for more cash flow. So the sum of the parts here might actually be worth a lot more. So I do think you could see a decent takeout on this asset. Now, that's hard to buy on, that thesis of, when that happens and does that happen. But I do think there is value that could be created here by breaking a company up like this.
Well, there you have it. I feel like I got to say, like, I have a real bias towards like, cheap looking names that, could get a bounce. And it's just like this business is kind of opaque. It's too many end markets. I can't get excited about it. Honestly, I want to. It's my bias. I want to buy a fallen angel. But I think what we have here is just like, this is a company that just their markets, I think they benefited. Maybe they were early to market, I guess. And, but I'm not convinced there's like a real moat here, and that, certainly I'm not convinced there's a real recovery in SaaS more broadly that is definitely happening.
Last question as we wrap: Would you short the stock, Bruce? Since you're so negative, Goro sounds like a hold, kind of like like me. I'm slightly more positive, but
I think this is a good short. Like I think there's so many ways for them to die. Like their gross margins could slip to 40 to something that starts with a 4. Like they're negative. They could have negative revenue comps in one quarter. Like they could, fail.
Wait, what do you think about the PE takeout? Would that scare you though? Do you think
it doesn't scare me, because this is like such a transformative PE takeout. There's very few firms that could do a deal this big, and like they would need to bet on something that's like not going to get commoditized. I mean, typically, like I think PE buyers could get comfortable just because of the cash flow profile, but like the product profile is so unattractive, like just because of like it's a commodity service based on usage-based pricing, which looks like it's, teetering on the point of like we're fully priced in or we're fully grown. And so I think it's one of those things where it's even hard for like a PE buyer to get, super interested. And then there's a lot of legwork in breaking this thing up, and like their core, the crown jewel asset should be segment. Like you would think it would be segment, but you're basically said that segment is like a 0% grower as well. So there's just so many different ways that this company can die. Like I would definitely be a bull on shorting the stock.
Bull on shorting the stock.
I'm a full on
All
short.
right, so we got a short to some holds. All right.
It's actionable. We got basically a short. This is one of our better short ideas, I think. All right, well then we'll wrap this up. Maybe I got to just say it right this time. Bulls make money, bears make money, and what do piggies do, Brucey?
Biggest slaughtered. Oink oink.
Bye, everybody. See you next time.
Say make money, money, make money, money, money. Make money, money, make money, money, money. Money makes the world go round. I'm not talking around town.